Forex Focus brought to you by IG, a real fun segment here today on the British pound and why and how it's become one of the strongest currencies in the major currency market here. We're talking about basically pound, US dollar, euro, Japanese yen, and you throw Canadian dollar and Australian dollar in there. And that's purely judging by GDP of those regions. But of those, major currencies that make up the major Forex pairs, pound has been on a hell of a run here. You might, on the face of it, say, hey, 127, that's not really historically a high value for the pound against the dollar. But I mean, that's 2,000 pips, more than 2,000 pips higher than the 2022 lows of 105 that we hit in September of 2022, or 20 cents higher, however you want to call it. That's a really big move in what's been less than a year. Forex pairs tend to trade with a volatility around, anywhere from 5 to 20%, which lets you know that in a year, they would move maybe 5 to 20%. And you can see here more than 20 cents higher from 105. That's already about a 20% move. So you're seeing the upside of historically volatile ranges for this pound dollar. And that's a developing story here. The pound and the dollar seem to be competing for who's strongest currency of those majors. Because you rope in the yen, and you're seeing a pound right now that's trading right at multi-year highs against this yen. And I believe this is going back to the 08-09 range, trading above 180 for the first time in years. And you might say, well, yeah, the dollar's been beaten up on the yen. The euro's been beaten up on the yen. Yes, true. But the dollar's not through its highs from last year against the yen. And you can see that pound is, right there at those highs against this yen is a really historical extreme that we're currently seeing pound beating up on that market. And throughout the first part of this year, pound and euro were both bouncing back against US dollar, give or take performance in a given week. Sometimes the pound would bounce back better, the euro bounce back, and kind of trading hands, so to speak. In recent trade, pretty much since, middle of April, start of May, the pound has been gaining on the euro, and they're obviously more highly correlated as they're very near to each other. Their economies are very interdependent in many different ways. But yeah, trading down to 85 cents here for the first time since summer of last year, as it's been a general trend lower for euro, higher for pound, near those year-to-date lows as we speak. And that's a context for what might make the pound right now the strongest currency. It's appreciating against most of the other major currencies. But, why is this occurring, and what could incentivize a reversal of this trend or a continuation of this trend? Well, I crunched some numbers on the stocks of some of these major economies, the S&P 500, US focused, EWJ, Japanese stock ETF, EWU, UK stock ETF. And it's not stock performance, because the S&P is up more than 15% year to date, and UK stock market from this perspective, EWU's perspective, is up less than 2%. And so relative performance between stocks in these areas, definitely not in the UK's favor. I mean, Japanese stocks are up, quadruple what UK stocks are up year to date here. So it's not that. And there's always been a looser tie between stocks and currencies. That's why they make great diversification partners, is because stocks being up, down, or sideways don't tend to lead to a currency doing X, Y, or Z. What does have maybe a more direct effect on the British pound's outperformance recently is it's higher inflation than any of these major economies at 6.5% core inflation here relative to 5.4%, 5.3%, and 3.2% of these other majors. And that makes sense, right? Because these inflation rates drive global interest rates. And though US rates are still slightly higher than UK rates, I think a lot of this move is of British pound being higher, appreciating in recent trade, is under the idea that the market is starting to price in that the UK not only has higher inflation right now, but could have higher interest rates in the near future. Inflation driving interest rates, which usually drives forex demand. Of course, these numbers don't all live in a vacuum. Inflation can be higher in the UK. Interest rates might move a different direction, or currencies might move in any direction that they want. But this has been a general trend that we have seen historically. And if UK inflation does stay higher than these other major regions, and the Bank of England does hike interest rates higher than the Euro area, US, or obviously Japan's still at negative 10 basis points in their interest rate, then you could see further demand in the British pound. Of course, on the flip side, if UK inflation moved higher than these other regions at a faster pace and then cools off at a faster pace, then maybe they'll be cutting interest rates, moving interest rates lower, and the British pound reversing there. But either way, you have this interesting strength in British pound for the first half of 2023 here. You have a bunch of inflationary data and interest rate decisions coming up. And if you have an opinion on where inflation might be stickier here in the US versus the UK or the Euro area or Japan, what have you, then you have some interesting trades and potential strategies in front of you.